SPY is strong today, rallying up almost 2% higher, and I made two important moves this week. Yesterday, I opened a long-dated cash secured put on Celestica, and today I closed an opportunistic short trade on Robinhood for a quick profit. In this video, I want to walk you through what I did, why I did it, and how I am preparing for next week using data, not predictions. By the end of this video, you will understand why I opened the Celestica trade, why I chose to close Robinhood trade quickly, what is happening in the broader market, and data releases that could move the market in a big way next week, the watch list that I am monitoring, and the step-by-step framework that I use to evaluate trades. My aim is to keep this educational and practical so that you can apply the same reasoning in your own trading if you so wish. But remember, this is educational purposes only. I'm sharing my own trading process, not telling anyone what to buy or sell. So let's start with an overview of the broader US market today. Let me go on the trading view chart so that I can show. So broadly, you can see that the US market is mostly green. If you look at this exchange traded fund, that is SPY, that tracks the S&P 500 and QQQ, they are both green. But the way that I look at this, I like to look at a daily chart. You see here, you can change to weekly trends, but I want to look at it with a long-term perspective. So in this regard, you can see that the US market had a sell-off yesterday. There was a huge drop like this. It was almost like 3% if you look at SPY. And then the reports were that there was a sell-off in crypto market because crypto is dropping. So some believe that some investors and traders were selling their equities in the US market to cover their short positions on the crypto market. And this can tell you how these things can really get out of hand. But when I look at trading and investing, I'm looking at the longer term, right? So if I look at the longer term trend, it's been going up. So that's why I decided to take a trade on Celestica. But unfortunately, I went in a little bit higher at about 285. But what I did was I took a cash secured put. I like to take a cash secured put at around this point, right when the stock is at this level of the Bollinger Band. This is the Bollinger Band and this is the moving average. So I like to take a delta of 0.20. So my strike price was 240. So what this means is that even if the stock drops to this other demand zone, I will still have another almost 14% discount from the current price. So the stock has to drop by this amount for me to even be closer to even losing money. Now, another thing is that I then sell a cash secured put. In other words, I should have the cash, in this case 24,000 for 240 strike price. But the idea is that I got 1,150, which is more like $11.50 if you look at the price points here. So that means for me to even lose money, this stock would have fallen below, if you say 240 minus $11.50. So that's how I manage risk. And that means I have to wait and be patient for the stocks to come at this level. But again, this is after I do research. I'm gonna show you a quick trade that I did on Robinhood as well. I use the same method. I check the fundamentals, but at the end of the day, I like to take trades when stocks are at this point. So I did the same thing here. I took a Robinhood 1 month out, just over a month actually, expiring on 2 June, but I took the strike price of 90. So I was basing that the demand zone was going to be, probably if it continued to fall, it was going to go down. But look, this is another 50% discount and I get paid for that before I even get into the position. So if I'm assigned, I will have been paid and then I get to have a much lower cost basis only on stocks that I otherwise want to own. Now, this is the framework that I normally use. check the fundamentals, and then do the technical analysis. Maybe I would say maybe 5% of the time, but I look at the macroeconomic data. So with that, let me move on to the next week's macro setup. On Tuesday, there's gonna be retail sales, core retail sales, producer price index, and consumer confidence. This data is very important because it tells you how those specific sectors are performing, and then likely investors and traders, they price that in making decisions on investing in certain sectors. On Wednesday, there is final Q3 gross domestic product data, initial jobless claims, and the Chicago PMI. This is a very interesting indicator that most investors want to look at to see how the US economy, in this case from Chicago, how the businesses are doing in that particular area of the United States. And core PCE, which is the metrics that the Federal Reserve pays a lot of attention to. At the end of the day, they want to keep an eye on inflation and unemployment. Yesterday, the data came out as 4.4%. So this is something that I'm going to be paying attention to because we have an upcoming rate cut in December. If the Fed reduces interest rates, it means borrowing will be cheaper. It's likely that equities market might continue to go up as money goes into even more riskier assets. So this is a cluster of meaningful data, and with Thanksgiving week bringing lower volume, I can create a sharper intraday swings based on this. So that's what I've been doing. Now, I told you about my position on Celestica, and I made that trade, and I'm gonna see, usually I manage the position. If I get it back into profit zone and maybe make whatever that I make, I get out and repeat the process, because what I like is to manage risk depending on what's really going on. I don't want to lose money, so I want to be safe in terms of my trading. I don't try to predict the market specifically because nobody can do that. But if I'm right on the direction, if it just goes up and time is on my side when I sell cash secured puts, it means I can repeat and make money gradually, thus increasing my return and having some cash flows as I go. Now, in terms of the watch list for next week, I'm gonna be keeping an eye on most of the stocks on my watch list, but SoFi and Nvidia have been very interesting stocks. If Nvidia continues to go up, then I'm not gonna chase it. But if it drops below about 170, I'm going to consider opening cash secured puts so that I can possibly make money. And I like to take a delta of 0.20, and that means I have approximately about 20% chance of being assigned. But if I'm assigned at a lower price than it is trading at, and if it is a stock that I otherwise want to own, I have no problem with that. But the key is I will have done the fundamental analysis. Technical analysis is the last thing, but also want to get in when the stock is really down and the implied volatility will be much higher. That means I tend to get higher premiums and I repeat the process. Now, the outlook for next week is that the upcoming data will likely bring movement, but it doesn't require prediction. My focus is on preparation, identifying key levels, defining my risk, and staying patient. If the market rallies, great, I'm gonna make money either way. If it pulls back, I get into opportunities, especially cash secured puts. That's how I trade. So if you found this video helpful, I invite you to subscribe to more data driven trading and investing and market education. And if you want to learn more, my full framework, or get personalized support, you can book a coaching session at www.streetwiseeconomics.com. Coaching spaces are limited, but you can check availability on this site. Thanks for watching. Stay informed, stay disciplined, and as always, stay streetwise. I will see you in the next video and meet you in the markets. Bye bye for now.